much we owe in vacation.
Okay. So at this time, I'm going to call the special meeting to order, and this is Friday, December 14th, 2018. And I think what I want to do is just have board members, all board members, let's see, we've got, we'll just go around the room and state who's here for this. So if you want to start.
Dina Mitchell, board member.
Board member.
Andy Holloman, board member.
Mark Foster, board member.
James Dowdy, BDO.
Alex Beckman, BDO.
Liz Myers, Finance Director.
Jim Anderson, CFO.
Andy Ratliff, OMB.
Dina Bishop, Superintendent.
Katie Grant, Board Secretary.
So I want to notate that we have two board members not present, and that would be Ms. Hildy and Mr. Donnelly. So at this time, we have action items. We have action items, ASD Memorandum 086, Comprehensive Annual Financial Report, the CAFR, fiscal year 2017-2018. And I am going to, who am I turning this over to, Dr. Bishop?
Madam President, you may go right to our CFO.
Okay. Oh yeah, make sure your mics are on and that you speak into them, please, because this is being recorded. Okay, Mr. Jim.
Jim.
Anderson.
At least you don't
having
have to
a
worry about
mental
my
block
maiden name
today.
versus my married
I
name.
know.
That was uncomfortable. Okay, so today we'll be briefing our comprehensive annual finance review. We do this every year, right before we start the budget season. And basically this document in front of you is a comparison to what was budgeted to what was actually spent and how we accounted for that difference for the last fiscal year. So starting the very first week in July, actually during 4th of July week, CAFR prep starts, reports start getting compiled. They start getting the last of the invoices all the way through August and sometimes into September of things that were actually purchased or services received by 30 June. And then they start cleaning up the books and they go through all of the funds. We work with BDO, has our contract to be our auditor, and they hold us accountable for the way we account for all of the funds and the expenses, the revenues, everything in every fund. And it's really quite a team effort in pulling off a CAFR. Lots of weekends and evenings. So now we just got the opinion letter last night. It'll be official today, so Alex Beckman will be briefing his overview of how BDO characterizes the audit and our annual finance review. Next steps after that, of course, is the board votes to approve that we passed our audit, and we get this to the state, so the state can provide our state revenue for transportation fund and for our general fund. So at this time, I'll hand off to Alex. James Dowdy actually is also here. He's the person on the ground in the building, pretty much start to end of the audit, and Alex is partner. I know there's a better term.
Partner's good.
Partner's a good term. Okay, I'll hand off to Alex.
Okay, thank you. I'll be brief, but we're here and available for any questions you might have, and that's really why we're here today. All that we need to communicate to you under our professional standards is included in this document that you should have in front of you titled the Audit Wrap-Up. This report kind of has a red cover on the front. Everything we have to tell you about is included in there. So really, if there's any questions or something you want to discuss about the audit or the financial reporting, that's the purpose of us being here. So please, at any time, if there's a question or something you'd like to discuss with the board, please stop me and I will endeavor to get those questions answered. Might be helpful to have this open side by side with the CAFR actual audit opinion. So if you go to the financial section tab, the first 2 pages in that section of your CAFR is our audit opinion. That's the only information in this document that we would consider that we own as your auditors. It's our opinion on the CAFR. So I'll kind of refer back and forth to that in the audit wrap-up document as we go through. First couple pages of that audit wrap-up report document is just transmittal information. Where I'd like to start is on page 3. At the top of that page, it's titled Status of Our Audit. We've completed our audit. We issued and released our report dated today. A couple important bullet points on this page I want to make sure we highlight is the first one. The objective of our audit was to obtain reasonable, not absolute assurance about whether the financial statements are free from material misstatements. What does that really mean? That means we have not looked at every single transaction conducted by the district for the fiscal year. We've looked at things that we consider material. We've done risk assessments and focused our audit attention on specific activities that are higher risk. So could something have escaped our notice that wasn't exactly 100% accounted for right? Yes, it could, but we do believe we've looked at every single material transaction and classes of transactions, and we believe our opinion provides a high level of assurance over your financial statements. The scope of what we conducted in our audit was substantially the same as we described in our audit planning communications and in our engagement letter. It's kind of the first step in our planning process as we start gathering information from management. We start looking at other sources, so public documents. We do actually Google searches, and we look at what's going on and what's been published. And we form a kind of a plan about how we're going to go out and conduct our audit, what we expect to see. Everything that we planned for, we saw, and so we didn't have to deviate from our plan at all. There were a couple of things that delayed us, and I'll talk about that as we go through the rest of the report. Third bullet point, we issued an unmodified, that's the clean opinion, that's what you want to get. On your financial statements, again, we released our report dated December 14th. Next bullet point, in terms of our responsibility for information in your CAFR, there's different levels of responsibility we take. We cover your basic financial statements. Our opinion covers those, so everything in front of the kind of the notes and forward, we're taking full responsibility for having audited those. But other information, i.e. the required supplementary information and the other supplementary information that's contained in here, we've done audit procedures on, but at a lesser step. So we're saying they're fairly stated in accordance with your basic financial statements. So that's an important distinction there. So some things in here we take no responsibility for at all, and that's your statistical section. So all that public information, all that information about spend per student, that's in the statistical information tab. We foot and cross foot, and we do some other procedures on it, but we have not audited that information, and we don't put any assurance on that. All the records we requested were made freely available to us, and management's cooperation during the audit was excellent. Okay. Turning the page in terms of the accounting practices, policies, and estimates. One of the things I'd like to highlight, and this is where you see in the audit opinion, so if you go to that first page in the audit opinion itself, you did implement a fairly significant accounting standard this year. Governmental Accounting Standards Board's number 75, Accounting and Financial Reporting for Post-Employment Benefits Other Than Pensions. If you've been around in governmental accounting for a while, you would have seen this similar implementation for pensions back in 2015. It's very similar for what we call OPEB, other post-employment benefits. We implemented that standard this year as we were required to do. And so you'll see that highlighted in our opinion. That's the last section, basically saying that you've adopted it. The reason why I bring this up is because with that adoption of that standard came an opening equity adjustment, so restatement of your opening equity. And so in your notes, disclosures, actually it's on page 69, you'll see the effect of the adoption of that on your beginning, your opening equity. So I just want to highlight that. It represented a decrease in your opening equity to reflect that opening balance liability of about $76 million. $76,208,222 was the opening balance effect. So it's disclosed in your notes there. So really what that represents is your proportional share of the deficiency of assets accumulated and the projected benefit obligation in the PERS and TERS plans for other post-employment benefits in the aggregate. Yes.
Just real quick, for those who don't use terms like OPEB frequently, most of this is the medical benefits for those Tier 1 and 2 TERS, and for PERS 1 through 3, obviously the last tiers on either plan don't have those medical retirement benefits. So that's really what it's talking about, is as the state has has ASD contributed enough to cover all of those individuals retired or soon to retire, or maybe not soon to retire, but who will retire, and those benefits will continue. And there's a lot of stuff in the notes pages to talk the details, but that's really what OPEB is. It's mostly medical.
So I have a question. Does this mean that we'll be contributing more? No, okay.
Now, your contribution rates are set in state statute, so it would take an act of the legislature to change your contribution rates. This just is this is an amount that just represents that unfunded position as of a particular point in time. So it's as of June 30th. Does not affect the way you contribute at all.
Although there have been discussions in Juneau in the past as to shifting responsibility for burden, but this is a GASB requirement. This nationwide. Everyone has to now report this liability for long term. But I know what you mean, and of course they'll probably continue talking about whose responsibility should this really be for the long term.
Thank you. Ms. Mitchell?
So I don't want to spend too much time on this, and I don't know if you even want to answer this question now or if we want to do it offline, but I'm just curious. I know that we had, as a state, underfunded these liabilities because of what we think is incorrect actuarial predictions, and is that reflected in here? And are you saying then that the entire $76 million, which is the ASD's share versus the state's share, is pretty much entirely due to medical? Is that, did I hear that correctly?
That's correct. The vast majority of that balance is related to retiree medical benefits. Okay. Other than that, really, that is the only significant change in the financial reporting. So if you looked at 2017's CAFR versus 2018's CAFR, it would look fairly similar, except for all the elements related to the adoption of this GASB 75 and bringing those liabilities and deferred inflows and deferred outflows, which is an interesting concept. But all those related activities are brought onto your financial statements for this year. That is the only new item for 2018. The rest of the accounting policies and practices were substantially the same. In terms of significant estimates in your financial statements, you do have some. You're self-insured for some of your health benefits. That requires you to do an analysis at the end of the year and determine where people have maybe gone and sought treatment, but you haven't got the bill yet. We call that incurred but not reported, so IBNR for short. So you're just required to reflect that as a liability at the end of the year. That's an estimation process because not all those amounts are known at year end. The other significant estimates are related to the net pension, so that's your GASB 68, which is related to your unfunded position in PERS and TERS for pension. and then the OPEB liability that we just discussed. Those are significant estimates and will change likely over time as we go through. I should mention also included in that IBNR is your self-insured also for workers' comp insurance. That is reflected in there as well, as that's an estimate. Your workers' comp payable liability is an estimate. In terms of corrected and uncorrected misstatements, there were none. So everything we audited tied out within our tolerances. We use a fairly low threshold for that. So when we say something's clearly trivial, that's a very small dollar amount relative to the size of the fund. So everything we audited tied out within that clearly trivial calculation. Turning the page, in terms of the quality of your financial reporting, we believe you're selecting appropriate accounting policies and practices. We've concurred with your significant estimates. We did not note any significant or unusual transactions that lacked authoritative guidance under GAAP. We believe your financial statement presentation is in accordance with GAAP also. That's our measuring stick. We measure everything against generally accepted accounting principles. The new accounting pronouncements that were adopted in the current year we've just discussed is GASB 75 for other post-employment benefits. And there were no alternative accounting treatments discussed with management during the audit. So fairly standard school district governmental accounting being used by the district. Turning the page, in terms of internal control over financial reporting on page 6, a lot of information on this page. Where you really want to focus is the very last sentence, where we say, in conjunction with our audit of the financial statements, we noted no material weaknesses. So as we go through and we do your audit, we don't just look at the amounts and disclosures in your financial statements, we also look at what is management doing to make sure those items are correct. We call that internal controls over financial reporting. So as we looked at how you're processing receipts, disbursements, payroll, a whole host of other accounting cycles, we did not see any major issues with how those things are being controlled and made determined to be correct by management. Okay. Other required communications start on page 7. Again, the top of the page, no significant changes to our planned audit strategy. We did not identify any violations with any laws or regulations. There were no specialized skills outside our engagement team that were necessary, except for we relied on the state contracted actuaries that prepared the allocation of the pension and OPEB liabilities statewide to all participating employers. We needed to rely on that actuarial analysis and allocation to come up with your specific number that you needed to put on your financial statements. Okay. There were no disagreements, no significant difficulties. However, there was a delay in us getting that audited data from the state's actuary. So it goes through a process like this. The state contracts with the actuaries, they do the report, they figure out the allocation, and then it gets audited by another CPA firm. Those audited schedules is what we needed. We didn't get those until near the end of October. So we didn't get it until October 26th at the end of the business day. So really, which was a Friday, it rolled over. But so that delay really put us a little bit behind in completing all the June 30 year-end government audits. The only written communication between us as your auditors and management is something we call the representation letter. That letter is attached to this report if you care to read it, but it's a standard worded letter basically saying they've allowed us access to everything we've requested. They have not identified any violations or violations we should be aware of. There's a whole host of information that we codify down in that one letter. We ask management to sign it. You might consider them that putting management's name to the financial statements. It's the last step in the audit process before we release our opinions. That report is attached to this if you care to read it. Okay, that concludes my remarks on the audit and the required communications. If there's any questions or discussion, I'd be happy to do that.
Is there any comments, questions? think we're still digesting. Yes.
So I'd like to ask Mr. Anderson or Mr. Ratliff or Ms. Myers if there's anything in particular that you think we should be aware of or focus on, or, I mean, it's a big document, we haven't really had a chance to go through it yet, but.
Correct. We pending Member Snelling's concurrence, we did plan on doing a deeper dive at the next Finance Committee meeting. We can do a quick skim. That gives you time to look at it, take notes, write down questions, provide any RFIs of any specific information you might want. And then I think everyone would be more prepared for any of those deep level discussions that might come out of this, but we would like to provide just a quick walkthrough just to familiarize the board members with the layout and the content, and then naturally, because a deep dive can depending on the questions, some of these can be, one topic might be an entire Finance Committee meeting, depending on the level you want. For instance, the Health Service Fund, we already know in January you wanted a deep dive on that, on the health of it, the state of it. Obviously, we would refer back to the CAFR on that particular fund at the very beginning of that, and then talk through where we stand and where our health of that fund is at the conclusion. So many of the different funds, as we bring back student nutrition and some of the other topics that we talk about at Finance Committee meetings, we will refer as a baseline to this CAFR, and then moving forward from 1 July up until the date that we discuss those funds.
We have to take advantage of the auditors while they're here. So let's, to the extent you're comfortable doing it, let's characterize Anchorage compared to other school districts with respect to how well we are doing on replacing and replenishing our capital asset base. For example, we have a depreciation book number, and we either spend above or below that in any given year to refresh our capital base. Do you have a sense of how well we are doing compared to other districts?
I do not have a sense. Anchorage is unique in the aspect that most other school districts that are affiliated with a city or borough, the city or borough takes on that responsibility. So you're a little bit unique in that regard. And the other comment I'll make to that is the capital spending, say per capita or per student, widely ranges across the state, and for good reasons probably. But I couldn't even hazard a guess in terms of measuring you against other districts in that regard.
Yeah, and I want to zero in not on the dollars per student, but on how we are doing with respect to our CapEx relative to our book depreciation. So are we above or below that line? And that's sort of as a statewide basis. I think it's a very interesting measure that tells us how we are refreshing our capital base. And I know in other industries where I sit, we definitely watch that closely in both telecommunications and electricity and the energy industry, just to see where we're at and how much value we're creating on our, and whether we're depleting or building or holding our capital base based on the accounting depreciation. So any insight that you could provide, either here or going forward from your practice, I think would be really helpful.
And I apologize, I'm not prepared to speak to that. That's not something that generally falls within our purview to comment on in regards to the financial statement audit. I actually think that would be a more appropriate question and information request from your management team.
Ms. Snelling?
A couple of quick questions. As I'm flipping through, just absorbing everything, for me this is, good bedtime reading. So I'm looking through like statement of activities, and it gives the 10-year look. This is way back on 144 and 145. On top of a couple of years, it says as restated. How do these documents get changed? Or can you tell me how a restatement works in that regard?
Okay, I'll take that. Restatements happen for a couple reasons. There can be the ones that kind of have a negative connotation to them, where you restate because you correct an error. And I don't know specifically why 2012 was restated. But yeah, right, correct. For 2018, the restatement related to the adoption of a new accounting principle, which was the GASB 75 that we just discussed. And I suspect 2014 is because that's the year we adopted GASB 68, which is a very similar standard, but for the pension side of your participation in PERS and TERS. But I'm not sure about 2012.
Okay.
You will see in one of the exhibits, though, where you'll see prior year and current year, and you compare that last year there was no GASB 75 equivalent. So those 2 years just don't compare. I mean, it wasn't required in the year prior, so it's really restating all of the requirements and just recognizing that there's something changed. Like GASB 68 was, I'm not sure what was in 2014, but so you've just changed what you're reporting,
Okay.
or not reporting in some cases,
Okay.
if you no longer had to report.
Okay. And then, can I keep going?
Yeah.
A couple of years ago, and I don't know if it ever fully came out, and it's GASB in the high 60s, low 70s. Kathleen and I come across it at a council meeting about somewhere highlighting in the book about charter school leases as an outstanding liability. And I can't place.
That
what
actually
that
doesn't
to.
take effect until, what, next year or the year after?
Yeah,
Okay.
But we will have to report the liability for the multi-year long-term leases.
Yeah, okay.
Right, and I believe the one you're referring to was the FASB statement for the private sector that would do it,
Right.
or non-governmental. Ours is statement 87, which will affect our
I think
leases.
it's 2020 I think it's 2020 when we start. 21?
21.
Okay.
When we start reporting it.
Okay, I
That's
knew that,
the
I knew it was
87.
coming out eventually, but they forward-looking that way.
Yep.
And then the only last question that I have, and I don't know that this is an auditor question, so much as, maybe management. As I'm taking a look at table AB and the charter school fund balances, and I understand that their fund balance, so like 9.3 million, it plays into what we have that we can't touch, but it is part of our, fund balance, percentage.
To address that, the money that's reserved for charter schools, we have it listed as an encumbrance. So it is kept outside of that unrestricted amount that we calculate of the up to the 10% of our expenditures.
Okay. I just
So
wanted-
it doesn't affect how much we
Okay.
can carry over in that
Okay.
respect.
So it is part of fund balance, but not the 10%.
Okay.
Ms. Mitchell?
I just wanted to follow up on Ms. Snelling's question. Are those, the restatements, is there a note somewhere in an appendix that explains why those restatements happened? Or do you think it's just not that critical to?
I don't remember.
And you don't need to answer that right this second. We can talk about it when we go through in the finance
Well,
committee.
We'll get together after this and talk about that at our finance committee meeting.
If I may, Madam Chairman, go back to your leases question. I just want to make sure it's not just charter school leases. You'll have to apply that accounting rule to all leases. There's a very limited number of items that would scope out, but it runs the gambit. It's equipment, it's buildings, it's any asset that you lease,
To include buses.
buses, whatever it might be. it's gonna be an interesting implementation for a lot of organizations.
There won't be enough weekends, Jim. And at this time, we'll let you proceed, please.
Okay. Like to start real quick, and we'll just briefly go through this, but if someone wants to hang out and talk accounting for a while, feel free to raise your hand. But the very first tab is it's actually the second tab. We covered we didn't go through the whole financial section. We can go back to that. So you have the BDO Independent Auditors Report, and then you see the management's discussion and analysis. This is actually a good one to go ahead and tab, because during the MD&A, it provides some overviews of tables that you're going to see later. And if you just put your finger on it, as you get to the follow-on exhibits or tables, you can go back and it'll provide a little bit of a summary over what you're looking at. Because sometimes it's really, it's a lot of numbers. So you kind of want to know what was that specifically trying to inform you. So the MD&A is a good one to look at your financial highlights. It briefly covers an overview of the financial statements, and that's kind of what I'm talking about. It'll give you a clean idea as you're flipping through to go back and see what was that particular statement about. And then when you get to, page 7, pages 5 and 6 talk about the 7 governmental funds and the 3 proprietary funds. So the first thing you'll see follow on is government-wide accounting. And those exhibits, those statements, it's going to be like your 30,000-foot view. Then you start getting into fund accounting, and those are the much more detailed per fund for the 10 types of funds that we have. So probably not a bad idea to just, if you get it all, not sure what you're following, to go back and look at the definitions. Then when you get to page 7, you get to tables 1 through 4, provide somewhat of a 30,000-foot overview. The details later, you'll see other tables and exhibits that really they come back to this one. So you can look at the overview, then later on in the basic financial statements, you'll be able to find something that corresponds to that. There is a paragraph summarizing each of the funds following table 1, and then the last component of that is economic factors and outlook. Specifically, I'm sorry, what page 13? Right. So on page 13, you'll see that we had done our economic factors and outlook, naturally, prior to the earthquake. Later on in here, you'll see in the notes that we did account for the reality that we don't know the full impact of the earthquakes at the time of this finishing the audit, but we did have to have a placeholder recognizing that we're aware of it and that there may be future financial impacts, and you'll see that later in the CAFR. So next is basic financial statements. Within the basic financial statements, it's really 3 components. Just as a reminder, you can go back to page 4, and it'll have a couple paragraphs that talk about what are basic financial statements. So you don't have to memorize everything. We talk about it up front, and then we go through the details that break it out later, and you can always refer back to that initial section. So there's 3 components. We've got the government-wide financial statements, where you will see different words being used. You'll see asset and liability instead of revenue and expense. It's really broad when you look at government-wide, and you'll see assets, and you'll see assets of over $1 billion. It's because it includes all of your vehicles, your equipment, your kitchens, your really real estate for us is by far our biggest asset. And it's full accrual instead of modified accrual, and we can talk about that in a finance committee meeting for those who want to deep dive on the difference between that. So you'll go through the government-wide financial statements, again, 30,000-foot overview, big numbers, and then we get into the fund financial statements, and those are where you're looking at your general fund and transportation fund, and you'll see the details on each of those. Again, instead of asset and liability, you'll see revenue and expense. They're very similar terms. And then at the end of the basic financial statements, there's page, 26 to 70, I think, are the notes. I think there's 11 notes this year, if I'm right. Those notes are very, at least we tried to explicitly describe everything you looked at before, the government-wide financials, the financial statements, and we try to put it in paragraph form to describe what occurred in each of those funds and where they stand. And that's kind of what your basic financial statements tab consists of. If there's any specific questions, we could go through the actual funds, or again, we could cover those during future finance committee meetings. I thought maybe a broad overview this time, and then I'll get with Member Snelling and see what are the areas that might be worth a good deep dive. So, if not, moving on. The next is required supplementary information.
So the required supplementary information tab, the first couple exhibits, exhibits 10 and 11, it's the scheduled revenues, expenditures, and changes in fund balance, both on the budgetary basis and the actual basis. This is for the general fund and grants fund, respectively, and this is generally used to reconcile the government, or the GAAP actual basis to the budgetary basis. And you can see that reconciliation on the second page of each schedule. The rest of it, the exhibits after that, are related to the pension contributions for TERS and PERS. And then the district's proportional liability, state's proportional liability, and how much of that was funded.
So following that is the general fund. That will definitely be a deep dive, I think most certainly, along with Health Service Fund has already been brought up as a future deep dive. But we can go through that in as much depth as you'd like at the next Finance Committee meeting, because we'll also try to talk through looking at how we closed out, I think it'll give you a better idea going into budget season that our projections this past or the prior year were really fairly accurate as to what we expected between not revenue, because we had a lot of intensive needs students, but it worked out okay, and our expenses really were pretty close. So I think that'll be a good primer right before we go into budget season. Next is special revenue funds. You'll see the grants fund, which by and large is revenues equals expenses for the most part. The food service fund, this is the third year in a row where the food service fund has been in the black. That is not typical of school districts in the state. And I think Mr. Mergens has really done a fantastic job, but that'll be a student nutrition discussion as we look at CAFR prior year expenditures versus current update. And we all know pupil transportation, it will show that it turned out all right, but that's because we injected money out of the general fund to give it enough revenue to meet its expenses.
Jim, can I stop you for just a moment? This just caught my eye, so I thought I'd ask. On page 87, under assets, the student activity special revenue funds. In 2017, it went from 4,615 to 63,737.
If I might, this is primarily a result of us internalizing the student activities and centralizing it. So as we brought those funds into the district's accounts, we have a due to from within the fund structure rather than keeping as a cash in a separate accounting system.
We kind of completed it this year at the very beginning of the school year. I think we did a test initially of 12 schools, or 2 schools initially. So what used to happen is all of our schools had this decentralized student activities where they all had their own checkbooks. They would get money, they would write checks to procure whatever they needed to procure for those activities. We didn't fare very well on the Muni's audits for our student activity funds, so we started the centralization process. And so now student activities funds can be tracked through IFAS, so there's more central visibility, not necessarily control. That's maybe more challenging, but certainly visibility for having it centralized. So I'm unaware of any more schools that have separate bank accounts, unless it's a PTA or something like that.
Yeah, I remember that conversation. When I saw this, I didn't realize that was the result of it. Thank you.
Debt service is the next tab, and you can hear me. I think the main thing to know there is that last year we had a transfer from the general fund for 1.9 million, or to the general fund for 1.9 million, and that was a result of the prior year where we had an excess in the debt service fund, so we had committed it and then transferred it to the general fund.
It's important to note that excess was there because the prior contribution, once Governor Walker cut our debt reimbursement, we covered that with general fund money. So the excess, the money that we didn't spend out of what the general fund transferred in, we transferred back into general funds.
So that the capital projects fund, Melissa, you got that one?
Well, I think definitely with the earthquake, we're going to have some different impacts to looking forward with our capital projects fund, but basically if you look at D2, you'll see there's not much year-over-year variance. I went from 23.9 for fund balance at end of year to 23.4, and basically it's just a reflection of your total expenditures by project. If you go to D3, it goes into the detail by site, by school, of your total expenditures for that year for FY18.
And then you have your internal service funds. We will do a deep dive specifically on the health insurance fund in one of our next couple Finance Committee meetings in January timeframe. We'll also not just cover the health service fund, but in January we receive our first annual report on the success or not as much success of the Vera Clinic. So we'll probably try to tie in the health service fund with expenses to date, as well as how is Vera performing. We know because we met with Alliant just last week, I think it was, that because of the tiered healthcare plan that we implemented, because some employees waived out of health coverage, and quite honestly, we haven't had a lot of really catastrophically severe conditions this year, that we're spending on medical about 91 to 93 cents on the dollar that we are collecting. So we're spending less than we're actually people are paying in and we're paying in. So it does appear, but that's 1 quarter's worth of data. That's without a significant number of catastrophic problems, that we're doing pretty good. If you look at dental and vision, it's like 97 and 99 cents, which is still, we're paying out less than what we're putting into the fund. So a few years back, there was a requirement to infuse that particular fund with a lot of money. I know Member Plunkett brought that up frequently, no more than 6 or 8 times a year. But it appears that right now that we are certainly stabilized, but I would like to go into a deep dive of that particular fund. I think one of the most important sections, not discounting the previous 140 pages, really is the statistical section. The statistical section, it's something you can go through as you want, but it really does provide when you want to know something about bond debt or some of the other, something you might be interested in, fund balance year over year over year. It shows you those 10-year comparisons so you can go back. And quite honestly, when we provide charts that, it shows whatever we're trying to show, and we show over a 10-year period, we always use the CAFR statistical data, because when we're comparing against the other 4 of the big 5, we use their CAFR data because it's all audited. So it's always possible for someone to pick a different month or a different data set, and it skews the results. So by and large, Dr. Bishop directed very early on, every chart we show you is audited data, and if there is no audited data, then we categorize it as to what the source is. So we've been very consistent for the last 2.5 years of everything we provide for the legislature, especially those big 5, all comes out of everybody's CAFR.
That's the dirty part.
So that's kind of the CAFR in one fell swoop. The audit we passed. He doesn't give grades, but I internally have graded my staff, and they really have done a fantastic job of pulling this together and putting systems in place. There's a lot of work to do, but let Melissa take a nap for tomorrow morning before we get back to earthquake
Right,
drills.
right.
So are there any questions? And I can get with Elisa later and figure out how you want to do the finance meetings.
Are there any questions from the board?
I'd just like to say that I am really impressed that there were no issues, and kudos to you for doing a fantastic job with this. I will look forward to some bedtime reading as well. Thank you.
I'll give you an A+. Ms. Sally?
So again, I wanted to say thank you to everybody who's done timely, and that's always a good thing. I saw that last year we got 2 recognitions for our CAFR. I don't know how we get those again, but would sure love to have those. So just, that's always fun to have in there, recorded. And I'll get with you, Jim, after this, and set up a time to go just dig deeper into this, but into some of those funds. We talked about student nutrition and health in January. But if there's no other questions or comments, I am going to go ahead and make a motion to go ahead and approve this.
Second.
Okay, and we're going to take a voice vote on this. So, how do you want to do that, Katie? Okay, so just go around the room, yay or nay. Okay, we'll start with you, Mr. Foster, yay or nay, okay?
Yes.
Yay.
Yes, yay. Okay, that is 6 yays and the motion, 5, sorry.
You technically did say.
Yeah, I know, that's true. I don't have a board to look at. It's like having kids, you have to count. Anyway, that passes with 5 yays.
It was well deserved.
Yeah. And again, thank you for all your hard work on this, and I know things aren't going to get smoother or easier because we still have a lot more going on, so thank you, and thank you to our auditors also, thank you. And we are adjourned. Moving into, we have another committee meeting to look at the presentation for the LIO, yep, okay.